Well, you know how we keep hearing about Canada, housing bubble, couple spots, Vancouver, and a couple other spots in Canada. The Asians, the Chinese are coming in. They're buying up all the property, pushing the prices up. It's crazy. They had to pass laws now over there in Canada so that if you don't live in a house primarily for 6 months or you don't have it rented out, then you're going to pay this huge tax, which amounts to, on average, $14,000 per year, etc. We're trying to keep the people out of here, from other countries, from buying up all of our real estate and causing the locals to not be able to live in their own freaking town because everything's too expensive and they can't afford it. So what did we hear the other day? Warren Buffett, I think it was Warren Buffett. He's going to go over to China and have them come into America and buy over here. Buy up a bunch of, we'll get a bunch of hot money, we'll bring it over here in America. When outsiders come in to have a ton of money to spend in your area, they'll price everybody out, which means everybody else that's still there has to live with those prices now. Rents are going to go up, mortgage prices, fees are going to go up because the house prices go up. So I see this interesting article from Zero Hedge. Canada's housing bubble explodes as its biggest mortgage lender crashes the most in history. I thought, well, that's odd. A mortgage lender crashing doesn't necessarily mean the housing bubble explodes, or does it? What is it? Certainly not a good sign one way or the other. Because as I read you this, whatever the issue was with this company that made it crash most in history, you're going to ask yourself, well, how many other companies in Canada and in the United States have the same issue? It just hasn't come up yet. Hadn't had to be dealt with yet, but it's there. Right? Call it Canada's new century moment. We first introduced to the company, readers to the company, we said was the tip of the iceberg in Canada's magnificent housing bubble nearly 2 years ago. That's why I love Zero Hedge. Not only do they have stuff here, and they're posting crap, so much crap every day, they must have like a database of things that just stick out to them that, oh yeah, we can go back and find what we said 2 years ago. I don't have such a thing on my YouTube. I'm just rolling every day. Boom, roll with it. Thinking, I think I did a video about that. Let me go see if I can find it. That kind of a thing. This is great. Nearly 2 years ago, they had this covered. In July 2015, when we exposed a major problem that we predicted would haunt a company known as Home Capital Group, or HCG for short, we'll call it, Canada's largest non-bank mortgage lender. Liar loans in particular. Liar loans? Isn't that like what we call ninja loans, no job, no income? What is this? Liar loans in particular, and a generally overzealous lending business model with little regard for fundamentals. In the interim period, many other voices, most prominently noted short seller Mark Cohodes, would constantly remind traders and investors about the threat posed by HCG. Again, that's Home Capital Group. Today, all those warnings came true when the stock of Home Capital Group cratered by over 60%. Its biggest drop on record after the company disclosed that it struck an emergency liquidity arrangement for 2 billion Canadian dollars worth of credit line to counter evaporating deposits at terms that will leave the alternative mortgage lender unable to meet financial targets, and worse, may leave it insolvent in very short notice. Again, how many other companies in America and in Canada have that issue? Liar loans and having to counter evaporating deposits at terms, right? How many other companies are dealing with that right now? They just haven't had to disclose it yet. Again, when I tell you everybody's like, if they're cooking their books, they're lying, their balance sheets, everything is just a freaking lie. And as I said, this isn't just banks. It's not just going to be, banks. It'll be other companies doing it. I've mentioned a few. And this is a non-bank mortgage lender. As part of this inevitable outcome, one which presages the company's eventual disintegration and likely liquidation, Bloomberg reports that the non-binding rescue loan with an unnamed counterparty will be secured by a portfolio of mortgage loans originated by Home Trust, the Toronto-based firm said in a statement Wednesday. Home Capital shares dropped by 61% in Toronto to the lowest since 2003, dragging down other home lenders. So let's think about that for a second. Why would one company... See, remember when VW, Volkswagen, they've been cheating on the emissions. They've been programming the computers to detect when an emissions test is happening and fake, make the car run in a manner that would make the data look good. Oh, you passed your emissions. It was a fraud. And VW stock's share price went down. But the whole car company stocks didn't get, other auto manufacturers took a hit today too. No, it was just focused on VW. Then they said, well, Saab kind of does something similar. They're partners with Saab. I think it was Saab. Yeah, we kind of did that too. Oh, Saab's down too. But Ford didn't get hit, and GM, and you know what I mean? So why, in this instance, would dragging down other home lenders happen? That interesting. Equitable Group Inc. fell 17%. Street Capital Group Inc. fell 13%, while First National Finance Corp. declined 7.6%. In short, the Canadian mortgage bubble has finally burst. Some more details on HCG's emergency source of funding. Home Capital will pay 10% interest on outstanding balances and a non-refundable commitment fee of 100 million Canadian dollars, while standby fee on undrawn funds is 2.5%. The initial draw must be 1 billion Canadian dollars. The loan has an effective and very much distressed interest rate. Whoa. No, I can't be saying that right. The loan has an effective and very much distressed interest rate of 22.5% on the first $1 billion, declining to 15% if fully utilized, according to a note from Jim Gloin, an analyst at National Bank of Canada. You basically have a credit card interest rate. You have a credit card interest rate from another company, and it's not even a credit card. But it'll decline to 15% if fully utilized. If you utilize it, the full amount, we'll give you a break at 15. But hold on, I thought interest rates and all that, negative over here, negative over there, 0 point something over here. Can't we get a little bit of that action? No, because you're in dire straits. We need 22.5%. Which I'm sure will help them. They're in debt. This is Greece. Think of this company as Greece, the Greek people, the country of Greece. Massive debt. We can't pay it. We just need to default. Nope. You're not allowed to default. We're going to rescue you with a bailout package from the EU and IMF. Here you go. You got to pay it back. There's interest attached. It's a lot of money. It's way more money than you ever imagined. And we also need you to cut all these government workforces and all this stuff and cut all that out. Only to find out they couldn't pay it back. So here's a second one. Here's another second bailout for Greece. Couldn't pay that one back. Here's a third one. Can't pay that one back. So think of this company as Greece. We're going to nail them with 22.5%. They're never going to be able to do this. And then we're going to scoop them up for pennies on the dollar when this is all over. We'll pick up the ashes. But in the meantime, we're getting 22.5% out of them. So if that company has to pay 22% on this massive loan, and they needed the loan to begin with to stay solvent, or they were bankrupt, kaput, completely gone, how do they have the money and funding and all these extra dollars coming in to pay this 22%, 22.5% on this up to $1 billion? Does any of this make sense? And by the way, I meant to mention this from the beginning. I stopped over at H.H. Gregg today at lunchtime. H.H. Gregg going out of business, yada, saw a sign, daily stuff coming in daily. Stuff is coming in daily? I thought you were selling stuff. Maybe, is other stores consolidating and they're bringing them to the Brandon area? Or what is this? Whatever. Got some couches, some little recliners, very little electronics in the back. I'm just walking up. I want to see what's there. You don't want to. They pulled the old. I don't know what you call this trick, but it's the old. Oh, there's a sale going on. There's a sale going on somewhere. It's this weekend only. Get down there. Let's go. Let's go there first thing in the morning. And they've jacked up all the prices and then say 20% off, 30% off, up to 50% off. But strangely enough, I didn't see anything for 50% off. I saw 20% all day long. And I'm looking at the retail price, and here's your out-the-door price today. For that, I could go to Amazon and get that cheaper than your 20% discount. What is this? We're supposed to be getting fire sales. There was like 2 other customers in the store. Okay? There was 2 other customers in the store. So maybe I'll wait a little bit longer. A lot bit longer. Before maybe I go back to get those sweet deals. Unless too many sheeple happen to come in from now till then, and buy up all the stuff. I got 20% off, man. I got 30. You got 30? Yeah. Bozos, they've been jacking the price up. And then saying, here's your discount. Unbelievable. Couldn't believe I was seeing that. Even in bankruptcy, they're pulling the old, bait and switch or whatever. I mean, not really bait and switch, but, jack the price up and then here's your discount. Unbelievable. Home Capital said the credit line is intended to mitigate a sharp drop in Home Trust's high-interest savings account balances, which sank by $591 million between March 28th to April 24th, so a month, at which point the total balance was $1.4 billion. Home Capital warned on Wednesday that further outflows were anticipated. Translation: what until last night was a depositor bank just became what until last night was a depositor bank jog just became a sprint. The loan will provide Home Capital with more than 3.5 billion Canadian dollars in total funding, more than twice the 1.5 billion in liquid assets it held as of April 24th. It also has 200 million in securities available for sale, and high interest savings account balances fell about 25% to 1.4 billion over the past month. Home Capital relies on deposits to fund their mortgage loans. Following today's announcement, the company's liquidity is certain to get even worse as all non-distressed sources of cash are pulled. Cited by Bloomberg, Andrew Torres, founding partner and chief investment officer at Toronto-based Lawrence Park Asset Management, said that the company is facing a bit of a liquidity crunch and they felt they needed to resolve it quickly. He said the steep commitment fee and the interest rate on the loan are surprising numbers for a company that was ostensibly investment grade. So a month ago, S&P and all you rating, Fitch, what do you, total investment grade, good deal. A month later, it would be insolvent and bankrupt if it didn't just get bailed out with this loan. So these rating agencies are nothing but pulling the wool over the sheep's eyes. That's you and me, and saying everything's great. The same rating agencies said all these mortgage, nightmare we had in 2007, 8, 9. All those companies, investment grade, everything's good. And then overnight, boom, gone. Investment grade, this is the worst toxic assets ever. How could this company possibly have an investment grade rating? That's because they're in cahoots with each other. That's why. It is their job to make sure that the perception of all these companies is great. So that's all this is. It's just perception. It's perception that it was investment grade. It was never investment grade. Okay? Hopefully, there weren't any pension funds involved with any investments in these companies, including the ones I read you that had no business even falling. Well, it was only investment grade because, as usual, the rating agencies never did their homework. For a real hint into the company's rating, look at the 22.5% interest rate. suggesting the company's days outside of bankruptcy are numbered. Home Capital Group's sudden collapse was actually visible from a distance. From a distance, you look investment grade. La 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 la. Sorry, Bette Midler. I didn't mean to ruin your song, but that was just right in my face. From a distance, you look AAA rated. But as I got closer, it was a stinking, rotting pile of toxic waste. Anyways, Home Capital Group's sudden collapse was actually visible from a distance, while in the summer of 2015, the termination of HCG was still debate, or maybe debatable. In recent months, the company's woes stemmed from allegations by the Ontario Securities Commission that Home Capital misled investors and broke securities laws. Again, how many other companies do you think are doing this? They all do it. In other words, engaged in those liar loans, which we first warned about back in the summer of 2015. Meanwhile, founder Gerald Soloway will step down from the board when a replacement is named, and Robert Blois will assume the role of interim chief financial officer, the company said Monday. The company anticipates that further declines will occur and that the credit line would also mitigate the impact of those, Home Capital said. Amusingly, it was just 2 months ago when the company set new performance goals after reporting quarterly results targeting revenue growth of 5% or greater, diluted earnings per share of 7% or greater, and a return of equity of 15% or more over the long term, according to Bloomberg. It should add one more performance goal, and that is, gotta love Zero Hedge, stay out of bankruptcy for at least 3 months. Quote, they did what appears to be to us a very expensive deal, said David Baskin, president and founder of Baskin Wealth Management in Toronto, a former investor in Home Capital stock. Basically, they blew up the income statement in order to save the balance sheet, which I guess if you're facing an existential crisis is what you have to do. Again, we flip-flop numbers over here, balance sheet over there, change that. Counting fraud, no, it's not really counting fraud. We're going to off balance sheet stuff over here. We'll put it back. Pump up the numbers. Hey, everybody, look at our numbers are great. AAA Fitch rating, Standard & Poor, we're great. Invest with us. Oh, breaking news. They just said that everything they've been telling you all these years was a lie. Oh, what are you going to do? Sue them? Good luck. What are you going to get out of them? What are you going to get out of them? That's why it's so important for you to take control of your finances, your retirement. And I kind of like things like precious metals because they're physical objects that can never, ever, ever go to zero. Unlike this guy's stock here. The Office of the Superintendent of Financial Institutions told Canada's BNN it does not comment on specific institutions it supervises, but that it maintains ongoing relationships with those institutions and is monitoring the Home Capital situation closely. Oh, now you are. But you didn't, no red flags stood out before. Well, no, because we just allowed them to tell us whatever's on their balance sheet and books and numbers. We just accept that at face value. Then what in the hell are you doing there? Why is your government office even in existence? So that you can come out and say, we're monitoring the situation. You know, it's like those little, was it Geico? What is those commercials? What are you doing? Are you going to do something? We're being robbed at the bank. I'm not a security guard. I'm a security monitor. You're being robbed. Office of Superintendent of Financial Institutions. Oh, we don't do anything. We just say statements after it happens. We don't do anything in advance. We just say, you know, you got to pay us big money to come out and say, we're monitoring now. We're monitoring the situation. Canada's entire mortgage lending market is tumbling. And on that last note, let's take a look at this chart so I can end this video. Canada mortgage lenders. There's Home Capital Group, Equity Group, Genworth, Street Capital. Yeah, and again, Home Capital. Ooh, did they drop? Not looking good. But then again, there'll probably be some news out by the time you see this video tomorrow morning some kind of breaking news. Someone fell off a wheelchair, markets rallied, Dow Jones back up. We're going to have a debt deal and ceiling's going to be raised. They're going to, postpone it a week. Now I heard they're going to push, we'll give you funding for another week. So the end of this month, not quite. Which is interesting because remember that date, May 11th? The one guy I keep telling you about who's got an unbelievable ability to pick market tops and bottoms and crashes and all that stuff. And he said March 23rd, was it? I forget the date now. March 23rd or something like that. He said, don't even worry about that one. The big date is May 11th. That's the concerning date in his work. Very badly so. So I'm just thinking, let me just pull up my little calendar here. The 28th, so you're going to see this video on the 27th, Thursday. Friday's the 28th. They're saying they may postpone, or not postpone, but push the debt ceiling. In other words, give the government funding for an additional week. So they don't have to have this discussion Friday and quickly pass a budget or debt ceiling issue getting resolved. So that would push it theoretically to the 5th. That would be May 5th, extending this a week. Friday's the 28th, 29th, 30th, Monday's the 1st, end of that, Friday's the 5th. And by chance, the very next week is the 11th, that Thursday. If I'm to believe this guy, and he has a track record, something's going to cause some issue. Is it going to be the debt ceiling? Who knows? But anyways, got to move on to my final video. Take care.